All right, good morning, everybody. We got CPI coming in today. This might be a chance to see a little bit of the anticipated inflation starting to bleed through the numbers, but it's still a little early if we're looking for the impact from Liberation Day. So analysts are watching close, yada, yada, yada. They're all, I'm sure, perched on the edge of their seats. So it's going to be one of those mornings where we could potentially see a liquidity gap candle. I've gone through that spiel before. It doesn't actually give you a gap, right? It's not like yesterday's close and then today's open and there's some gap with 8 to 10 points in it. It's an actual candle. So just be mindful this morning, and I'll be putting in the chat some heads up if we actually get one and what that means. Give price targets. Small caps basically flat. NASDAQ and the S&P in the red. Dow down the most, more than 0.5%. The president is not in the U.S. Always makes me nervous when I hear that. Not to be morbid, but puts are cheap. So, until he's back on U.S. soil, carrying some really cheap puts is not out of line. Just saying. Once we're done with the morning part of all of this, the afternoon starts to clear up. Other than some auctions, so we got 11:30 auction 52-week. We got Bank of England late in the morning, and that timed out pretty well with the close of EU yesterday and the way the market timed that turn. Late this afternoon, it'd be around 5 o'clock. There's going to be the Trump at the Saudi state visit. I was listening to Bloomberg this morning. They were talking about multiple headlines before that. So it's like we're going to get spoon-fed press releases, all day today. But when it comes to anything big this afternoon, we got nothing, right? So other than those potential headlines that can come in that are just going to be part of the press corps, we could have a pretty quiet afternoon, all things considered. Yeah, it starts to get really busy on the later part of the week, but we'll worry about that later in the week. This is yesterday's RTH that I've got in the range here. We got to get out of the range to do anything else. The base case argument is that we're going to hold the line into the later part of the week for bigger data. But if we break the high and manage to get through the 1, 2, 3, 6, then we're going to expand to the upside and continue to push through that 59. And if we break the downside, then we're likely going to go back to the bottom of this really big candle. Talking about liquidity gaps this morning and the possibility that CPI could give us a liquidity gap, that's what a candle like this is. That's a liquidity gap, right? The idea is that if you want to close the gap, you got to go back to where it started. that would be the close of the gap. So this morning at 8:30, we're going to get CPI. We could very likely end up with a candle like this. Doesn't have to be a candle to the upside. It could be to the downside. As long as we don't get a big wicks on either side and we don't close near where we opened, then it's very likely that we have a liquidity gap candle, and we'll look for that to get closed before we do anything else. We're in this hurry up and wait mode, but we are firmly above the 0 gamma and volatility trigger. They did roll the call wall up, which I consider to be a bullish behavior to see that happen. Put wall is still a long ways off. It would have been more bullish when they rolled the call wall up to also move the put wall up. So like we got a little bit of bullishness because of the call wall being moved, but then they didn't follow that up with moving the put wall, and it's not as good. It's like giving somebody a car with no motor in it. It's still good. You got a good car, but sorry, you're gonna need to get a motor. Takes a little bit of the fun out of it. We did get to the 200-day moving average, and we rejected off of that. That's not a surprise, right? There's an old phrase: first we bounce and then we break. Well, that's usually a phrase for when we come down onto a level and we bounce off of it before we end up breaking through it. But the same concept can be used the other way around. We ran into it, we get rejected. First we reject, then we break. Now on this rejection, how we reject is important. So, a mild pullback like we did here would be ideal, right? That we get up there, we bounce off of it, we reject a little bit, and then we make our way back up. We don't want, one of these deeper corrections. That's like a 400-point correction. It still worked out, right? Even with that rejection, we were able to get back up and then continue on, but it's a much deeper correction. So we're looking for a mild rejection off of this 200 and then potentially moving on. When we left this low behind, did a whole thing on whether or not that was the low. And at the time, we didn't know if it was going to be the low or not, right? We just knew it was a low, just not the low. At this point, it's still possible that we go down and break that because, price can do whatever it wants, and we wouldn't say it's impossible, but it's not probable. It's not likely. To even get back down into this 51 area and break this low would take a tremendous amount of effort and work, right? It's not likely at this point. It would take everything that we did with the tariffs starting all over again. If he was to bring, right, really big headline news and smack tariffs on everybody at an exaggerated rate and level and severity, something like that could cause us to get back down into this. Otherwise, everything that we've seen is improving. The rhetoric is improving. The tariff state, the situation that we're in with tariffs is improving. The forward outlook, we just had another big bank change their year-end forward outlook from like 61 to 66. So everything is improving. I find it very unlikely we're going to go back to 5,100 unless something really bad happens. So the low is in, and it has been in for a while, but that does not mean we're going to make it all the way back up to, old highs and into new highs. We could just chop around in the zone for a while. So one thing at a time. We have our range for today. Break the half to test the low, break the low to get to the liquidity gap, break that to get through the Globex of yesterday, break that to get to the close from Friday, level by level by level. On the upside, big bites would be 1.5, but smaller would be 1.2. So 1.2 is here. It's 58.92 cog line. Half is 59.11 cog line. 100% of this move is 59.50. Low volume this morning, 72,000 compared to yesterday at 251. It's only low compared to yesterday. It's within range if we're looking at last week, and it's in range if we compare it to the yearly average that we normally hold around this 45 to 75 range. Well within the norm. But when we look at yesterday at 251,000, and then we look at today with 72, it really comes in kind of light. We are closer to the lower ADR than the upper, so it's not out of line to say we could very easily hit the lower ADR. Plus, we don't need a breakout to do it. If we look at yesterday's low and yesterday's high, if we want to hit this ADR, we've got to break out. But to hit this ADR, we do not have to break out, which means the path is easier to that one. And we're already closer to it. We're down, near 0.25%. So if we can break our own Globex low, that's a really nice target. 58.11 cog line, then 5,800 round number. It's the low of yesterday. If we get there early enough in the day, it opens the door for us to go to the other side by the end of the day. But this isn't early in the day, right? The day is half done already. I know, I get it. If you're new to all of this, you just woke yourself up out of bed and you think the day is just starting. But the futures opened at 6 o'clock last night, and we are past 6 o'clock this morning. Half the day is already done. So if we're going to hit one side and go to the other by the end of the day, it really needs to get in gear and get that done, which could happen at CPI in 45 minutes. Then we could run down there, hit that, create a liquidity gap to the downside, run back up, get the gap closed, and hit the other side. The distance from the weekly floor pivot, it's no more of a concern today than it was yesterday because we faded off of that high a bit. It's around 3.5%. Now, how far we can get from that weekly pivot to the downside is much greater than how far we can get away from it to the upside. I don't think we can sustain a 4% move away from this, but that opens the door for at least another 0.5% higher than where we were at yesterday's high. So there is still room to the upside, but that would be stretching it to the limits of really how far we could get away from that weekly floor pivot. If we look at the daily floor pivot, it's a really wide channel, which implies that even if we do get a breakout today, it likely doesn't stick and that we end the day back inside the range. To be clear of what range we're talking about here, it's all of yesterday. Now, if we look at this wide channel and we say it's unlikely that we break out, and we're talking about the bottom down here, well, that makes sense because that bottom is a long ways away. We would have to break the floor pivot, the half, yesterday's RTH, get through the gap close all the way down to the Globex, and then break that and keep it and close outside of the range. This channel is saying that's not likely. But the channel also implies that if we break out of the top, it doesn't stick and we come back in again. These channels don't make price do anything, right? It's not going to cause a breakout or a breakdown. It's just giving us insight on what to expect if we do get a breakout or a breakdown. So far, it's an MDP. It's a missed daily pivot. We had one from yesterday that counts for today. If we keep this one all day, it'll count for tomorrow. It is a trading strategy, but it's also an analysis concept. It's not my strategy. If you want to learn more about it, hit YouTube, type in missed daily pivots. You'll find the guy that really put a lot of work into it, and you can learn it. I don't trade it, but I do use it in my analysis. I turned that on real quick just to see where the R1 was at, and it's a long ways off, 59.18 for R1, 57.76 for the S1, which would be lower than the Globex, or lower than the RTH low, but higher than Globex low of yesterday. Really nice distribution here. We're holding around that 58.50 point of control. We are above it, so we have that structure underneath us. We can see, of course, the shallow area from the announcement and the push. We can see price move through these shallow areas in both directions. So if we were to start working our way back down and we break 58, we can go to 57.50 relatively fast. There's not a lot of footprints here to slow us down or get in the way. Ten-day, 30-minute volume profile and TPO. The TPO is not really reflective compared to the volume profile. It's a lot more elevated on the volume side. The shallow area lines up well. Point of control on both of these are in sync. We're not expecting to see this move anytime soon. But looking at the amount of volume that we need to overcome to see this move, if we hang out here another 2 days, we could see the point of control move up into this zone. That's early. We weren't expecting to see it move for at least another week. But we're building it out swiftly. So we still got 2 days at least before we start getting into these candles. If we stay here for 2 days and then we start wiping these candles out, that will be enough and we'll see the point of control move up. The thing is, we need to be above it when it gets there, right? We don't want that point of control over our head trapping us. Then we have to fight through it to get above it and continue on to the upside. No new VPOC from yesterday. If we were to try to carry that forward, it's already been hit. So no value out of that. And for this morning, really nothing is showing up in there that is a surprise. We are still outside the box, although we're supposed to close inside this box 70% of the time. When we are consistently failing to do that, then we have no expectation that it's going to happen at all. And we have shown a consistent failure to close inside the line for a while now. So I wouldn't get really attached to the idea that we're going to make it back inside this box this week. There is a tremendous gap that we left behind. It's not the first one either, by the way, right? We've got some others that are really big as well. But if we do get back inside this box, then getting that gap closed would be a fairly decent target. Still less than 3% above the 10-day. And we are starting to edge back away from the extremes. Now we're still elevated, but it is backing off some. So if we can just hold the line here, maybe digest and fade back a little bit more, but mainly just hold the line, then we can heal and we can let the 10 get caught up with us. We don't need to correct through a drop. We can just correct through time. Three and a half percent above the 10-week. It's not the worst that we've seen, but it's a bit stretched. Kind of hold the line here or pull back a bit would be good. If we continue to the upside, we got to worry about, say, 5.5 or 6, but we're not there yet, right? So if we look back, 5.5 is about as bad as it got during the bear market, and +6 was part of the COVID recovery phase, right? When we were really outrunning the 10-week on the way back up. So we're not at those extremes yet. We really don't want to see it there. Kind of hold the line here. Let's try to keep it under 3.5. If we get above 3.5, it could start to accelerate. We'd say watch for spot up, vol up sort of situation. Right, China's down this morning, no matter what you want to use, right? MCHI, AEM, KWEB, yen, all of those are down. It kind of just stacks up. XLF is down, which we would expect. And looking at what's up, we got Bitcoin and solar. Don't really want a rally on solar. Now we do have the gold miners, but they're not up enough. And in the last 5 days, they've fallen more than 8%. So after falling 8%, getting even any little bounce to the upside makes sense. That doesn't make them bullish, just more of a reflexive bounce after falling 8.5%. So I wouldn't get bullish on, precious metals and the gold miners. Between the small amount that's up and the small amount that's down, it leaves a lot in the middle that just isn't doing anything. It's a market waiting on data. So it's very likely that we need to see the data to see money get committed. Having Bitcoin up is awesome from that tell on risk, but by itself, it's not enough. And with the volatility levels on Bitcoin being as low as they were and starting this move back out, it was on a lot of people's radar anyways to have that expectation of a move in Bitcoin. But that isn't enough to bleed into everything else, right? It's just one piece. So we've got crude to the upside, silver, precious metals, hot stocks, gold miners. That is not what you want a rally day based on. So if we're looking for the S&P and the NASDAQ to break out on the upside and continue to run higher, we need different sectors and different industries up this morning, not these. XLF, XLK, chips, consumer discretionary, not precious metals and pot stocks. We have a little concern with the 10-year. It went up when we went up, which is fine. It's not a big deal. But at some point, that becomes a bad idea, right? We can't continue to expect the 10-year to match us higher and higher, because then things would really just start to get out of control and break. So we got to watch for that decoupling, and we don't have it necessarily yet, but I would be watching for it. So if we say that ES does break to the upside today, gets above 58.70, continues higher, and we don't break this 4.47 on the 10-year and go higher here as well, then I would look to see if we actually break in the other direction. See if we get the 10-year breaking down while we get the ES breaking out. Otherwise, if we break down in the 10-year and we break down in the ES, then fine, right? They're still in sync. They're still moving together. It just happens to be that they're moving back down together. The dollar did get a little out of control. It's calm now, but we don't want that dollar making big moves up or down. Really doesn't matter, right? To me, which direction it's moving, just how fast it's moving. Its rate of change. Don't want that rate of change getting extreme. We are back above, 101.5. It's kind of a line that we could expect to get back down below. Would be better to see it back below 101, eventually back down to 100. It was interesting. I think it was a week and a half ago, that Bloomberg was making comments on the Secretary of Treasury's focus on the dollar. And I heard it on the radio. I went looking for the article. I couldn't find it, but I didn't try looking the same day, right? Some time had went by, so I missed it. But the idea was the administration had been focused on a lower dollar. It was a part of their 3-3-3 plan. And then Bloomberg, like a week ago, was talking about how the Secretary of Treasury is now pushing for a higher dollar. Like the plan changed. Now, I don't have that info. I haven't been able to find the article yet, or whatever it was that he did that made Bloomberg make that comment. So I don't know. But if the goal now is not to see that lower dollar, it doesn't necessarily mean they're going to try to push the dollar higher, but they're not going to be going out of their way to keep it lower. And that kind of changes the dynamic. I just don't have enough information, right? I haven't been able to find the article and find what it was that he did that made them comment like that. So it is something to really think about, how that's going to affect the trades that we've been focused on, or even just the thematics that, we've kept in our sights. Changes the rules. All right, this is simple and sweet, right? Break our own Globex low. We challenge yesterday's RTH low. Break that, and we've got the gap to close, and then the Globex low, and then finally Friday's close, level by level on down. To the upside, we can measure just the RTH, and we can project that higher. But we can also measure all of the range, and we can project that higher. And you see that they line up really well. The 1, 2, 3, 6 from the RTH is just the 111 from the entire measurement. So it's not about, which one's the right one or which one's the wrong one. They give you the same answer either way. If we get above 5909 and hold it, then we would adjust the levels from there and plot new upside targets. But if we consider the idea that we have the wide channel today, we're not expecting breakouts to stick today. We very likely would get into the 1, 2, 3, 6 and end up coming back in again. So what I got for you guys today, be careful, be safe, keep your eye on the headlines, and try to find the news release of when Trump data is supposed to be coming through, because they said it was likely going to happen 2 or 3 times today, that there would be these like prearranged announcements, but they didn't have a time frame when I was listening. Maybe they have one now. I will see you all tomorrow.